Jim, let's do Mad Money post game now. I know you spoke to the CEO of NRG Energy.
Yes, Dave Cramer.
Now, will this Egypt crisis make alternative energy in general more attractive?
Absolutely.
Okay.
I think it definitely will. It's just not big enough. Dave and I were talking about there are 30,000 cars that are electric. You know, well, I mean, we got to get to 300,000 before you even spot it, and then 3 million would actually begin to dent the oil import. David's been at the forefront of trying to build nuclear power plants. It's almost impossible in this country. China putting them up all the time. He's doing a huge amount of solar, but a lot of that is because there's subsidies. And when the subsidies tail off, he's hoping that the price of solar energy will be so high that it can still make up. Energy will be so high that it can still do well. So it's really a mixed picture. It's very much the future is brighter than the past, but the future is elusive. And NRG is the most forward-thinking utility in the country, but doesn't offer yield. It's doing a buyback. It's got $12 in cash. I prefer dividend. We're not getting it.
So if they had a dividend, it'd be more interesting? Or
Definitely,
is it more of a
but they're definitely not going to go that way. And I mean, I think that NRG, as it goes closer to his cash position, gets more attractive. But you know, it's a difficult thing to be. I said this to David, and he's an old friend of mine from school. That David's trying to do a great deal that's good, and that I'd rather have a Dominion or a Con Edison that's not doing a great deal that is good, because I think this is a market that doesn't put a value on electric cars yet or on solar, but does put a value on yield, which is good in a turbulent time.
Now, where does this leave natural gas in general? Because I was surprised it hasn't even moved really.
No, but you know, I think that the BHP deal on top of the CNOC deal, you're really starting to get deals that show you that natural gas has a future. Cabot Oil and Gas reported a really good number. Chesapeake's still largely natural gas, even though they're shifting rapidly to oil. Natural gas is, you know, it should be. I mean, I was on Morning Joe today, and we were all saying that Boone Pickens is going to be right. Natural gas is the right place to be. But natural gas is kind of like David Cramer at NRG. It's too much in the future, so people will buy them today. Maybe they sell them tomorrow. But I like the stocks. And Southwest Energy, which is the one that we own for Action Alerts, was one of the 10 worst performing stocks last year, and yet they are growing their fines big. And remember, this is the most important thing. For $4 billion, Chesapeake sold its Fayetteville shale. That would value Southwest Energy, which is 37. It's 74.
Wow.
Minimum. And I know Southwest Energy, when they were on my show, said that they're willing to sell. So why not take advantage of the stock, of a stock that's the worst performing stock in the S&P that isn't up this year, last year S&P, and buy SWN? I think it's right. And
then real quick with that, then for an investor who wants to get in on that, how long do they need? What's their time frame?
Southwest, you don't need a lot of time frame because you could get lucky. I mean, there's too many deals in the natural. Look at Duncan Energy this morning gets a takeover from Enterprise Product, and last week Williams decides to split itself up. And Southwestern is not a pitiful, helpless, company. It's the best in the industry.
All right, thanks, Jim.
Thank you.